Welcome to McBox Capital channel. My name is Michael Chu. This is a market recap video for week ending May 2nd, 2025. So we are now into May. We started off April pretty rough, and you can see right here it went down pretty hard, and then now we have started to come back since then. So that's really good news. April 2nd was the liberation day for the tariff stuff, and since then we have starting to come back up to where it was. So that is really good news, and we also this week we make good progress. We surpassed the 50-day moving average, which is the red line. We still have the 200-day, the black line to deal with, coming up very soon. So that will be possible resistance there. So we'll see how the market handle that. Yeah, looking at the daily chart, if we go back to April 2nd, so yeah, it was around here, yeah, right there, and then we have this huge drop right here, and then yeah, it dropped pretty hard for a couple of days, and then the third day it did reverse, and that was the low right there, and then we came back up to the 21 day, and then we pulled back once more, then we came back again, and we pulled back even more, a lower low right here. So that low probably shake out a lot of people because at that moment you're thinking that it's going to come back down. Now that was the last time it pulled back really hard for a few days, and then from there we have bounced since. And this week we did see one rough day here on Wednesday, and that day was related to GDP number that wasn't as good. So let me jump to that right now. So this is from Investor Business Daily newspaper. So the U.S. Added 177,000 jobs in April. So that was on Friday. So that was better than expected. So Friday market did rally. So that was really good numbers, and market was a little bit worried that the numbers are going to come down, but it didn't. So but the Q1 GDP fell at a 0.3% rate right here, the blue bar right here. So you can see it's negative. The Fed Federal Inflation Gauge, core PCE price index show cooling gains versus a year ago. So the inflation is good. Okay. Go from CNBC, U.S. economy shrank 0.3% in the first quarter as Trump policy uncertainty weighed on business. The imports saw 41%, driven by a 50% increase in goods. Imports subtract from GDP, so the contraction in growth may not be viewed as negatively, given the potential for the trend to reverse. Okay, so that's part of the reason the market bounced back because there's consideration that the future maybe this won't because the imports are being front loaded in the first quarter before the tariff take place. So that going forward, this number wouldn't be as bad. So that's what the market is thinking right now. But in Nasdaq, we did see the bounce on Wednesday, right at the 10-day moving average, and also 21-day where they crossed. And then Thursday we followed through. The market gap up. It did reverse by the end of day, but then Friday, it moved up again because of the job report. So it has been a very strong week with a 3.4% gain here, and that pushed it back above 50-day. And the red line is very important because it's generally institutions do follow that 50-day moving average. And then we also have 200-day. It's kind of flattening right now. It hasn't really declined much yet, but it is flattening. So this coming week we'll see how it acts around there. My guess is, the best case scenario would be like going up there and then, kind of have a little bit of a sideways movement, and then that'll be give it enough time to kind of build up, energy to surpass it again, right? So that is the idea here. While the 10-day also has to catch up. It's kind of, you see, we touched the 10-day here. So as it comes out, eventually it might touch the 10-day again before it take off. So that's the general idea. We'll just quickly look at S&P, very similar chart, I believe. There you go, very similar. Dow, this one is still at the 50-day, 200 days right here. So this one is lagging a little bit. And Russell just came out of the 50 days, really far below the 200-day. This one is the weakest index, so it's been correcting the longest since. I'm wondering, are we gonna have a V-shaped rebound? Um, you know, no one knows really, right? A lot of people are calling this a bear market rally, obviously. Some people are just saying, hey, it's gonna chop a lot more before we go up. I mean, nobody really know the answer, right? That's the future. But anyhow, with that being said, I want to look back at the pandemic correction. It was very similar, except that one happened even also very fast, right? Within a month of correction, we dropped 30%. So this one was a V-shaped rebound, and so I just want to take a look at the chart here. So we did bounce back above 50-day right here, and that's kind of where we at right now. We bounced back above 50-day. The 200-day is still moving flat, so very similar, except this 200-day is not like at the top here. It's just where the 50-day is. So this one looks a little bit better than current charts. Okay. So with that being said, if we just concentrate on the 50-day, we went back above it, right? We went back above it, then we kind of went sideways, and then we bounced off it, then we actually got knocked back down. Okay. So that was another test right here, right? So the 10-day, even in a very steep slope, it is going to be tested, right? So this was the test right here. So we could get that this coming week. Again, just like Wednesday, we got a test on the 10-day. We could get another test coming, but this time it might test the 50-day. And then it bounced again, and then from there it bounced again. So very nicely. And then look at this, and then we test the 10-day right here again. So it's never far away from a 10-day, even in a V-shaped rebound. So I do want to caution that because whenever we get a little bit further away from the 10-day, look at this, we get another test here. So even in the strongest rally, it's not easy to trade it, right? Because you're gonna keep getting this very sharp pullback, 1-day pullback, and that can knock you out easily. So that is the hard part, right? For another month, and then you can continue to see the sharp pullback right here, another one, right? So even we bounce above the 50-day, but it constantly tests the 10-day, like so, and then here you can see because we went really extended from the 10-day right here, and it fell all the way back to the 21-day, and then it goes up again, and then goes up and then test the 10-day again. So here's another month forward again. We test the 10-day. This one. So then we have the kind of huge run right here, and then we have another huge 1-day down right here. So this was on June 11th. It was a 5% down day, and then we stayed there for sideways movement for 2 more days before it bounced again, and then once again we pull back again, very sharp pull, right? So the run here was like shorter pullback, like 1 or 2 days, and then here we're getting like 3 day, 4 days pullback here, and go forward another month, and then we see again it basically make new highs and new lows every single time, right? But we're seeing lots of pullbacks, right? Lots of pullbacks. So then here we run again in August, another pullback right here, okay? And then this one ran a long time. Look at this. So usually when it runs a long time, I think we're starting to get into more like a parabolic move, right? For stocks, because the stocks are usually moving even faster, right? So and then here we are. This is now in September 2020, and we finally topped. Okay, so this was a really good run from late March basically so to early September. So basically roughly like if you count from April to August is a little bit over 5 months, right? So that was a really strong 5 months rally back in 2020. Are we going to see something similar? Perhaps. I have no idea. So we'll just have to take it 1 day at a time and 1 week at a time and see how market is reacting. And of course, I'm hoping for something like that. Um, I do want to say the market has broadened in terms of strength. Okay, this week we saw a lot of stocks in my growth stock list, which I'll do a video later if you want to follow that. And the ones that are ranked like 200 plus, a lot of them have moved this week. So even though they were laggers, but they're actually starting to move. So they're starting to participate in this growth trend right now. So that gives me some confidence that there's momentum behind growth stocks right now. So yes, it could be a sustainable rally. Um, and obviously, there's lots of talks. This tariff deal is going to work out, and nobody knows. And the next deadline is July 2nd, because that's 90 days from April 2nd. So that's still another 2 months away, and we'll see. Some deals will be announced, and then people will analyze it. Will it be, and then obviously, the July 2nd can be extended as well, right? So that could be even further good news for the market. So again, we don't know what's going to happen, but we just have to follow the momentum. That's how I trade. They slope right now very sharp. Um, Again, we could either go up a little bit more before we pull back, or we could pull back right away and then bounce. That's the ideal situation. The 50-day is coming down really hard, so it might take some time for it to curve back up, even if we have a sustainable rally. And so we might be consolidating around this area for a little bit, I think. And we are in earnings season, like we just started getting into like not quite, but almost 2 weeks of earnings, like strong earnings. Last week was a lot, right? And then this coming week, for sure, many more. So yeah, so the next 2 weeks will be even more stocks as well. Most of the mega caps have reported. So yeah, maybe the market is ready to continue its run. We go to S&P. It has a very strong run right now. I think it's a 9-day rally, which is the longest since 2004. That's what CNBC reported. So that is also a really long streak. So generally, when we have streaks like that, they usually end pretty soon. So we expect some down day coming up here. Yeah. So here's the again from the IB newspaper, New York Stock Exchange advanced decline daily line at the bottom here. This line basically shows the number of stocks up versus down every day. And right now, we can see that it is making new highs even before, like right here to the left, and then going to the right, you can see this high is higher than this high. And even though we haven't hit a new price yet, but the advanced decline line is already hitting new highs, which means there's more stocks, going up than down at this moment than even at this, almost a month ago, right? So that is very important, because that gives us, confidence that there's a lot of stocks building up momentum right now, moving up. For Nasdaq, we're not quite there, right, quite there. Right here, is the high, and if you go to the right, we're still below this previous high. So Nasdaq is lagging a little bit, so in terms of broad-based strength. So a little bit more selective there. But with the New York Stock Exchange, is widening quite significantly. Innovated IBD 50 ETF, very similar. We punched through the 50-day line. We are sitting just below the 200-day as well. We have the Fed meeting on Tuesday, Wednesday. Expectations that rate stays the same, and we'll see what they say about the June meeting, whether they're ready to do anything. But probably, in my opinion, probably unlikely not. But who knows? We'll see. For earnings, we have more companies share having reporting this weekend. Palantir, we have DoorDash, Uber, Walt Disney. So we still have lots of earnings news. It was below 50-day, but now it's coming back above it, where the 10-day moving average also there. So we'll see if this prolonged might be bad, right? But let's see. The US dollar also bouncing back here a little bit, still below 21-day, but above 10-day. The oil price continue to go down. This is not good. We are getting closer to the lows here. So gold has fallen below the 10-day moving average. Now it's just, gapped down to 21-day. Now it's just trying to hold on to this line. So it looks like the downtrend is in place right now for gold. Bitcoin, on the other hand, has moved up really nicely. Nice base right here, building up on the right side. Holding it tight here, but found support at the 10-day moving average. So yeah, looks really good. China index here, FXI. This one has, corrected really significant, then came back up. Now look at how tight this was trading right here, and the volume dissipate, and then on Friday, it came out from this nice cup with handle base. So China stocks could work again, so that's one to mention there. Let's see if anything stands out. Right here is technology one, XLK, very similar to the index between 50-day and 200-day. Here's communications. Communications above 50-day. 200-day is even lower, so that means there's not much resistance here, so that looks really good. Retail came back above 50-day, still fought to reach the 200-day here. Consumer staples is not doing much, going sideways, so this is more defensive right now. Is still holding on, and consumer discretionary now above 50-day, and the 200-day is very near it. Industrials, look at this, industrial. I noticed a lot of industrial growth stocks move very significantly on Thursday and Friday, and you can see this chart is very powerful. Like we went above the red line 50-day, and then we also crossed the 200-day black line. So this is really strong momentum, obviously extended, but it just shows there is strong momentum behind this. Here's the material sector just above 50-day. Utilities, just like the staples, consumer staples, holding on tight at the 10-day. Health is kind of lagging again, and possible defensive tone there. Hasn't really moved. It's still below 50-day. Energy, obviously, probably the weakest area right now. Financials also bounced really hard on Friday. Look at this move, gap up. And finally, we have real estate, also defensive. This one is still moving up higher. Semiconductor SMH ETF. So here's a 50-day. We bounce above it, gap above it. So it is recovering. Let's take a quick look at Nvidia. It follows the same pattern. It also bounced above it right here. So that's good. It's not the strongest relative strength. So there might be other stocks, that doing better. We'll go over some of that in the growth stocks list video. We talked about the IGV, the software ETF last week. iShares doing really well. Like even last week it was above here, right? And then this week you can see we found support on Wednesday, and look at how fast it's moving up. This is really sharp. The software group was doing really well right now. And one of the mega cap stocks, Microsoft, reported this week, gap up on earnings, really strong fall through on Friday. This was a really nice move on Thursday with 7% gain. They show accelerated revenue from their AI component of Azure. So that is really good news for them. And so AI is finally working for them, and that's could be a nice long-term move for Microsoft because it's been building a long base. And look at this bar right here, this bar, because of that, one day and then Friday. It's probably the biggest bar in a long time. This could be, game-changing kind of move, right? Especially if the AI continue to take off. Another stock that reported, it didn't do too much. It went up very little. It barely went down. It barely go up on Friday. Amazon still below the red line. So this one is a little bit weaker. And then you can see the numbers are very low, right? Single digit. And you compare that to Microsoft. We see teens here, and then we see closer to 10%. And look at the sales number, also very strong compared to, and then look at Amazon here. Yeah, so it's just stable, but the earnings is kind of really weak now in terms of growth. Google, it went up on earnings the week prior, but then it started to come back down, pull back, and now it's starting to go again. So this time might work. So that's looking good. We have Meta. Meta also reported. It didn't make much move here. It might have moved back down, and then Friday it followed through again. So yeah, looking really sharp. Now moving on to Apple. Apple, tariff news continue to be a headwind, and that's what they reported from the earnings. So a lot of the iPhones that will be sold to US will be made in India, which have tariff. So that's kind of gonna hurt them going forward. So right now it's looking not very good choice. And Tesla, after reporting the week before, did really well. In terms of the reaction, the news wasn't good, but the reaction was actually okay. And then it pulled back here, and then it bounced here. So this looking very nice setup, right? Very nice setup around the 10-day rate. Musk, I think that he will be moving aside from the Doge department, taking more of a back role. So he's leaving the White House. So yeah, so this could be maybe some news, but there's also news that the board is trying to replace him. So who knows what's going to happen, but this is what the chart is saying. It's looking pretty tight here, so that's a good action. So thank you for watching today's video. If you like it, please like and subscribe, and stay tuned for my next growth list video. Until the next time, bye.